Hello and welcome back to our podcast and channel. My name is Gemma and here at WIS we talk about all things money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm. It means that you won't miss out on any of our videos. On today's podcast of Let's Talk Money and Mortgages, we have Ifthi giving us his top tips. For those of you who don't know Ifthi, not only is he a trained accountant and mortgage advisor who's been in the industry for over 10 years, he is also the founding director here at WIS Group, so it's an absolute pleasure to have him back on the show. Hi Ifthi.
Hi Gemma.
How are you doing today?
It's lovely to be back. I'm fine, thank you.
Good. Oh, Ifthi, I'm sure most people think, they come to you and they're like, oh, it's going to be so easy to get a mortgage. But once they actually start the process, they might realize it's a little bit tricky. Is that right?
Yeah, it is. It's not the same. A lot of people come to me and say, my friend got a mortgage. So I'm very similar to my friend, right? So you should be able to get a mortgage for me as well. But, everybody's different, right? So it's never straightforward. Yeah.
Yeah, okay. Well, let's pretend that I know nothing about mortgages at all. And we'll go through some top tips. So the first tip that I've got here is make sure that your credit file is clean and accurate. How can I make sure this is clean and accurate? Talk me through that step.
Okay. Yeah, credit file is quite important. I'll just explain to you what a credit file is. The credit file is, checking your credit profile, how sort of you performed in the past with your credit commitments. So usually we tell clients to download a credit file. There are credit reference agencies which you can use to download these credit files. Popular ones are agencies like Experian, Equifax, Call Credit. I think they're known as Credit Karma these days, right? But my favorite, so my favorite is Check My File. So what Check My File does is they consolidate these credit reference agencies. So they take Call Credit, they take Equifax, as well as Experian. So it's all in one place. So, that's...
So there's a couple of different ones all together.
Yeah,
then.
That's right. So that's quite helpful because in the past, if somebody said, I'm going to X bank, we know which credit reference agency that bank uses, right? But nowadays, banks generally go to a few agencies. So with a company like Check My File, it looks at few agencies, right? So if there's a problem in one place, sometimes it's not updated in the other one, and that can affect your credit file, right? So that's why it's quite important. So it is quite important that you look at your credit file.
So it helps to find discrepancies.
Yes,
then, I suppose,
definitely.
If they're all kind of next to each
other. So often we find that people sometimes have problems with their name, right? So your passport says something and your credit file says something else, right? So if you base your mortgage application on your passport, the bank might not be able to find your information, right? So those things needs to be corrected. So we find that people's addresses can be wrong. So those are basic things that can be corrected. But if you go on to the heavy stuff, right, you have to look at whether you have any adverse credit. Now, adverse credit is if somebody had something like a mispayment, right, and especially if it's gone on for a while, right? So that's adverse. Things like county court judgments. Now, those can definitely affect your mortgage applications, which makes getting mortgage a little difficult, right? So we just need to see that you don't have those things in your credit file. Also, you have to look at things like, whether your address is now registered, whether you're on the voters register. So those things, I think we'll talk about that a little later. But those things you can see in your credit file. And also...
And I was sorry, if I was just going to go back to that name thing. What about if you're newly married? Does that affect your credit if you have or haven't changed your name?
Generally, it isn't because banks generally ask whether you are known as a previous name, right? It's always good if you're if you're married, it's probably best to update your name. Banks mainly look at your passport name, so that's what they look at. But of course, they will want to know this new name as well because otherwise you'll have probably two credit profiles, right? So you have to be a little careful, right? So, yeah. Also, with sort of the credit file, it's important that you look at your commitments, because sometimes, it takes time for the commitments to be updated. So for example, you have a loan and you just settled it, the bank might still see it, right? So it's important that you see those
Okay.
things and highlight those to your brokers, or if the broker is looking at it, the broker will quickly spot it anyway, so that those can be flagged up to the bank, because otherwise the bank will say you can borrow less, right? So that's not the result you want, especially if you are settling a loan,
No.
right? Because you want more money, that's why you're settling the loan, right? So yeah.
So are they looking for the score itself, or what kind of information it shows them about you?
Banks generally credit score you, so they look at your score for sure. Some banks don't, but most banks do, right? So it's quite important that you have a good credit score as well. But sometimes credit score doesn't tell you the story. For example, I had a client who had a good credit score. When I say good credit score, it was somewhere in the 800s, but whereas he had a couple of missed payments, right? So that didn't go very well, right? So just because you have a good credit score, it doesn't necessarily mean that you're good, right? Most of the time it does, but you got to look at the detail, because sometimes people just take a screenshot and say, "Oh, I've got a score of 850. I think I'm all good," right? But no, you got to look at the detail, because devil is always in the detail, right? So yeah.
Yeah. Does it matter how, like, I think they store your information for quite a few years. So does it matter, like, say you got a missed payment like 5 years ago? Do they still look at that, or is it more something like recent
Yeah,
that they look
generally
at?
bank looks at recent ones, because that's the one,
Okay.
because it reflects your credit, right? Because somebody having sort of financial difficulty, they may have recent missed payments, right? So generally they look at the new ones. But if you have things like CCJs, it will go back a few years anyway, right? So, but generally, if you're clean over the last 2 years, most banks will be happy, provided you don't have something like a CCJ, right, which can have negative impacts anyway.
Okay, well, thank you. So let's go to point number two. Get a decision in principle.
Yeah.
Do you want to talk us through what a decision in principle is and how we can get one?
Okay, cool. Decision in principle is again a very, very important thing, because that tells you how much the bank is willing to lend you. So that's why it's very important. So I'd say, even if before you go and see houses, you need to see how much you can borrow, because you might look at
Yeah.
of course, you might look at a 250.
You don't want to waste your
No,
time.
definitely not, right? So it's always good to get a decision in principle in hand before you go and look at a property. So that will show you how much you can borrow. Now, my tip on this one is be honest with your mortgage broker, because because what happens is, okay, I don't sort of, sometimes this happens with some of our clients. They like the property, they made an offer, they come to us and say, "Look, I need the decision in principle, I needed this yesterday, right? But can I have it in an hour's time," right? So then you're kind of trying to get a decision in principle in a rush. But I'd say share all your information with your broker, especially, banks, your sort of salary slips can be a little complicated nowadays, because people get salaries, they get different types of bonuses. You get a quarterly bonus, you get an annual bonus, guaranteed bonus, and not guaranteed bonuses linked to shares. So it can be very complex, right? So get those details proper, because sometimes people say, "I earned 5,000 as bonus last year," but that doesn't really mean much, because you have to break up those components, because banks like to see those in detail, because each type of bonus can be categorized in a different way. So if you don't give the
Yeah.
right information, you may end up with the wrong answer. Because the last thing you want is you have a decision in principle of 100,000, and the bank says, "Sorry, because of your bonuses, we can only give you 90 now," right? So you're going to be short by
Yes.
you're going to be short by 10,000, right? So what do you do, right? So you'll have to either get your family to help you out, or you might have to pull out of the transaction. But you don't want to find that out later. So you want to get this right as
No.
much as possible. Yeah.
Right. So just get all the information and make sure you tell your mortgage broker that.
Yes,
Yeah.
that's right. Yeah.
So point number 3, ensure that you're on the voters list. So basically, our point is that if you Just to make sure that you're on the voters roll, is that right?
Yeah, that's what it is, Gemma, because that's quite important. Because what happens is credit files generally pick up whether you're on the voters registers or not, right? I had a client who came to me the other day. His score was something like 700, right? And he was not on the voters register. He went and registered on the voters register. His score went up significantly, right? That could have been make or break for him.
Oh,
Yeah, it could have been make or break for him because 700.
so it makes a big
Yeah,
difference,
it does, right? So it's very important that you're on the voters register. That's sort of simple tips that you can just do to make your profile much better. If you're not registered, it's very easy. You can go to gov.uk. There is a separate section for voters register, so you can register yourself, right?
Yeah.
So, yeah.
And how long does it take for you to show up on the
Uh,
register?
I mean,
Is
it's.
it a matter of weeks, or are we talking months?
I don't think it takes months, but it's not a matter of days, right? Because you can't just update it and it doesn't get updated overnight. Because I think it does get updated quite fast, but then the credit reference agencies need to pick it up as well. So those can take a little time, right? So it won't be months, but it's certainly going to be, you'll have to leave a few weeks for that, right? So if you are thinking of buying a property few months down the line, just do it now, right? So because it'll help you for sure. Yeah.
Okay, thank you. And point number 4, we've got bank statements which are nice and clean.
Yeah, squeaky
What
clean.
does this mean, Ifthi?
Squeaky clean is what we call it, right?
Squeaky clean.
Yeah, banks like to see, your bank statements very clean, right? So, of course, with your bank statement, they look at two things: your incomings and your outgoings, right? So, with the incomings, mainly your salary. Let's say if you're employed, so they'll want to match your pay slip with your bank statement, right? Uh, Quite often it's all fine, but we have found certain discrepancies where the numbers don't match, right? So in which case you probably have to go to the employer and get a letter to say why it's not matching, because that will be proof for the bank to say that the number is not wrong, right? So that's something that they check. If you are self-employed or a company director, they will want to see some kind of salary or dividend going through, because obviously they need to show some income, right? Because if there's no income, how can you sort of afford a mortgage is the first question that the underwriter will have, right? So it's very important that, so it's very important that those numbers match. And of course, the expenses, right? That's again very important, because this is the tricky bit, right? Because we've seen some of our clients have had exceptional expenses, right? Like entertainment. There was one of our clients who had a hobby of sort of gambling, right? So those go down as commitments as far as the bank's concerned. Because it's not.
Why is that then?
Yeah, it's not just.
Is it because they do it a lot?
Yeah, because they do it a lot, right? So if somebody's spending, 300 pounds, say, skydiving every month, right? So that just becomes a sort of a hobby, right? And if you see that month after month, it's a commitment which you can't live without, right? So banks like to move it as a commitment, right? I mean, I had a client, sort of young lady who used to go to nightclubs every weekend, right? So with her, what happened was, a bank picked it up because, on a Friday and a Saturday, you see that a lot of expenses going through on nightclubs, right? But luckily for her, it worked out in the end, because the numbers just made it through, right? But it could have gone the other way if you were sort of neck to neck with your application. So therefore, be careful. So if you have certain hobbies, you probably want to not, show the bank that you can live without those, right? So they will look at your bank statements.
Right.
Yeah.
Like maybe do a budget or something before you're thinking about getting a mortgage.
Definitely. I mean, the normal stuff, supermarkets and all that, they're fine, but it's just those expensive habits, they generally pick up on those things. And remember, we are going through a sort of a different time at the moment. With COVID around, banks are generally, they go through bank statements more in detail than before. So these things will be easily spotted, right? So just make sure that your bank statements are as clean as possible. Yeah.
Yeah. Do they typically like to see that you've got a little bit of extra money left over each month? So, I feel like a lot of people, they might just spend everything they earn. Is that where people might be going wrong?
Yeah, I mean, it's always good to have that habit because that's the headroom, isn't it? Right? A headroom always, if I'm an underwriter, it'll give me that comforting factor. If I see that, okay, my balance keeps increasing every month, it'll give you an idea that, okay, this man is a little careful with his finances. It always helps, right? These little things add up, right? So, yeah, definitely it'll help.
Yeah. Okay, thank you. So now we're going to go to point number 5, proof of deposits.
Yeah.
So, I mean, obviously, everyone needs to have some kind of deposit
Yeah.
these days. So, is that meaning like proof is how you kind of got the deposit? So, if it's from a family, does that mean they have to sort of write a letter or something to say, we gave her this deposit?
Yeah, yeah, definitely. That's part of it as well. Quite often, most people save their own money, right? So, for example, if somebody is salaried, right, we find that they put aside £500, £1,000 a month, and they build up that balance, right? So, banks want to see that audit trail, how you build up that balance. Generally, if somebody is salaried and they are regularly saving money, those are sort of easy ways to prove it. But it can be complicated with people who are self-employed because they take bigger chunks of dividend. So in which case you might need something like an accountant's letter to back it up. So it can sort of vary. So that is your proof of deposit. But like you mentioned before, sometimes there's family who come in to support people to get their mortgage by way of deposit. So generally, gifts are acceptable from the bank. So close relatives or family, they can sort of give the money that's needed to their sort of children or siblings to sort of buy the property. So that's allowed. But like you said, you need a letter from the donor. Plus, you also have to make sure that there is audit trail around this. So for example, parents gave you say £10,000, right? The bank will want to see the parents' bank statements for the last 6 months.
Okay, so if you've been saving for like, I don't know, like 10 years, because sometimes I think it does take a really long time
Yeah,
to
it
save
does.
for a
Yeah.
deposit.
Yeah.
Do they want to see sort of 10 years, or is it just, the last sort of 6 months of saving or last year of saving? Like, how far back do they need to go?
They generally look at 6 months because they can gauge that, right? Some even look at just 3 months, right? But if they need more detail, it's always sort of good to sort of have that. I've not seen a situation where they've asked for 10 months, 10 years bank statements. But they've gone back quite a while, right? Where underwriters feel that they need a little bit more additional comfort, they can ask questions like that.
Okay, thank you for that. Point number 6, Ifthi, plan all your other costs apart from your deposit. What kind of things are other costs that you might have to consider?
Okay, so quite often what happens is our clients come, obviously everybody, especially if you're a first-time buyer, you're stretching to get your mortgage, right? So a lot of people plan their deposit, say 10%, 15%, whatever the number is, but they don't plan the rest of it, right? Because remember, you got to pay, you got to pay your solicitors, right? So you got to pay maybe surveys, right? Because if the house is old, quite often we say, look, do a survey because it can be in your best interest, right? Banks sometimes make you pay for a valuation. So that's also cost, right? So you got to plan for that. And, you have to have a little bit of a unforeseen sort of event budget sort of thing. Because, just imagine you move into the house and the heating system stopped working, right? So if that happens, you have a problem, right?
The boiler breaks.
Yeah, boiler breaks down, right? So you need to have that additional funds. So always plan for that. And obviously you need furniture as well, right? So you got to plan for that. Yeah, otherwise you'll end up with a shell and, you're just living in a shell, right? So
sitting on the floor.
yeah, I know. It's probably not the best experience. So that's why I think you need to have some additional funds planned as well, because these things you might need expenses for these things. Yeah.
So like a little contingency fund just in case things go wrong.
Definitely.
Yeah? Okay. Thanks. And point number 7, if you are self-employed, you would need SA 302s and tax overviews. So I think most people kind of think, okay, maybe I'll need an SA302, but what about these tax overviews?
Yeah.
What's a tax overview?
Okay, so I'll explain what a SA302 is first because that might be helpful. So if you're employed, you get pay slips and you get a P60. The P60 is a tax certificate to say how much tax you have paid and how much you've earned in the financial year. Now, for self-employed, the equivalent of a P60 is this SA302s, right? So if you're so if you're sort of a proprietor, sole proprietor, you will have your takings, which is shown in that. But whereas if you're a company director stroke shareholder, you will show your salary as well as your dividend on it, right? So that generally is reflected on your SA302s. It's like a tax certificate equivalent to a P60. Now,
Okay.
yeah.
So you need both of those.
You do, right? So then the tax overview is what shows the amount of tax you have paid, right? So yes, it's well and good that you say that, okay, I have to pay HMRC £6,000, but if you have paid HMRC only £2,000, that's not something bank is happy because you haven't sort of paid HMRC the money that's due, right? So you have to keep the queen happy, right? So you have to make sure all your taxes are paid.
They want to see you paying tax.
Yes, definitely, because because banks worry if you don't do that, because what happens is they think, okay, if they are not paying HMRC, they may even default us, right? So because that's not the mentality you want the underwriter to have, right? So just make sure that it's paid. So just make sure that's done. But also what's quite important here is if you are self-employed, this is a trick that a lot of people miss, because sometimes you can go with your profits, right? Now this works if you are not taking all your income as dividend, right? So we have seen clients who earn 100,000 for a year, but their dividend plus salary is only 50,000. The reason for that is because after 50,000, you become a high taxpayer. So if they don't need that money, they don't take it out, right? So for people like that, the banks know that their capacity is much higher, because if need be, they can bring in the other 50,000 as well, right? So some banks, that's right. So some banks will look at your profit and loss account. They look at your salary plus your profit that you've earned in the year. So that option is available with some banks. So don't miss out on that trick. SA302s and the tax service is very important, but sometimes this is a route that a lot of people miss out on.
Yeah, so it's basically meaning that you can sort of still pay less tax. You don't have to increase your earnings to show that you can afford the property, right?
Yes, that's right, yeah.
Okay, thank you. And we've got point number 8. Pick a digitally driven application process. Why might that be useful? I mean, is that because of COVID or just in general?
It definitely helps with COVID for sure, because obviously you can stay at home, don't worry about going out to meeting mortgage brokers or going to the bank. You can do that, right? And I mean, digital application is where the world's going as well. Slowly, the brokers are starting to introduce this. So with a digital application, nowadays you can do an end-to-end process digitally, right? So we use things like open banking. We use auto ID verifications. We also use credit files where you can download sort of on our system itself. Now, the advantage in doing that is you don't have to download bank statements. It makes things faster. You don't have to send copies of IDs because we can auto verify those. And because we are picking up information from your credit file as well, it automatically populates our system, which means we can now submit that application digitally to banks, right? Where the banks accept it, we can digitally submit the application to the bank without much manual intervention, right? So with that, what happens is obviously your application process becomes much faster because it cuts down the paperwork, right? And also it doesn't just it doesn't just stop there, because what happens is it speeds up your process, and it's less errors as well because the information comes off your credit file, right? So credit files are generally quite accurate.
I was going to say that. It feels like it's a little bit not less effort, but because everything's already there, you don't have to find the paperwork. You don't just sort of submit the details.
Yeah, that's right. So it makes life easier for everybody, because otherwise, if there's a discrepancy of, let's say you had a loan of 6,000 and the credit file said you had a loan of 7,000, the bank will question, why is there a difference, right? But whereas, it's, if you are looking at information of your credit file, it can't be wrong, because that's what bank sees anyway, right? So, that stops banks asking additional questions, which will only, help you speed up your application, less errors. So, the application process
Yeah.
is fast. But obviously, with COVID, things have slowed down, right? So especially if you're pushing towards like to avoid the stamp duty, additional stamp duty that you have to pay after March, these things can help you, right? Speed up your applications, because 1 or 2 days can make or break for you, right? So that's why this is quite important. Also,
Do you have to register for open banking? How does it work?
no, our software does it by itself. You just have to put in your login
Okay.
details on our software, and it does it automatically. So you don't have to separately register.
Wow.
Yeah. So yeah, it's quite advanced. I mean, yeah, I think there will be a lot of changes in this space, because we sort of pride ourselves as a fintech mortgage provider. Likewise, we can see a few fintech mortgage providers coming up, right? And also, it doesn't kind of stop there as well, because we use technologies such as WhatsApp, Facebook Messenger, because those are apps that people are used to now, right? So it's a good way of communicating. So that's like communicating on the go, right? So, because normally if you go on a normal chat line, once you finish your chat, you're done, right? So you have to have, if you remember another question, you have to probably come back and explain the whole story to another advisor, right? But whereas if you're using things like Messenger or WhatsApp, what happens is somebody else can pick it up. So if I'm not there, my colleague can pick it up. In 2 minutes, he'll figure out what the conversation is, and then he can continue with where they stopped, right? So, that's very convenient. So, there are a lot of good technology around, and there are a lot of technology that people are comfortable with, right? So, digital mortgage brokers are moving towards those kind of apps, right? And of course, like you said, it's COVID. People use things like Zoom to have communication, Microsoft Teams. So we speak to a lot of our clients this way. So that way, we can put a face to a name anyway, and, we can have the conversations that way. So yeah, things are changing in this space.
So it's good, if you are self-isolating, everything can be done
Yes.
online through Zoom or messaging, texting, those kinds of
Yes,
things.
that's right. Yeah.
Okay, great. Excellent. Point number 9, select a solicitor who can process your application smooth and fast.
Yep.
Why might that be? I mean, obviously, I see the benefit, but what kind of things are you supposed to be looking out for when you select a solicitor? Like, what makes a good solicitor?
Okay, so we have a sort of a software we use, which is sort of very similar to something like a trip advisor for solicitors. So on that, you can rate solicitors. As brokers, we can rate solicitors. Our clients can rate solicitors as well. So with that, what generally happens is, we get ratings, and based on the ratings, we can select a good solicitor. Now, this is why a solicitor is quite important, a good solicitor, because just imagine you're buying a $500,000 property or $1 million property, right? That is probably the biggest transaction you do all your life, right? So I tell people, please don't compromise on the solicitor, because the solicitor is the one who does the biggest job in this transaction, because they are the ones who have to check the deeds. They are the ones who have to sort of question the seller's solicitors on various stuff. They are the ones who go to the local authorities and checks things. So they are the ones who are doing the biggest job, right? Getting the mortgage, yes, it is a big job, but you got to get the solicitor right. So just make sure, because I sometimes see people compromising on solicitors for £100, right? I'm not saying cheap is bad, but all what I'm saying is just make sure that your solicitor is good, right? Go with recommendations, or speak to your broker, because brokers do have access to these kind of systems, right? So you can use those to get a good solicitor. So try and make use of that, because a solicitor's job is very, very important.
Yeah. Oh, okay. Well, thank you, Ifthi, for those great tips on how to get a mortgage. I just want to put a little reminder out there to our viewers that these points may or may not be suitable to you. So please do check and talk to an advisor about these if you're unsure if they're suitable for you. And if you don't have a broker, I will leave our WIS contact details below, as we are always happy to help. We just wanted to remind you that a mortgage is secured against your home or property. It could be repossessed if you do not keep up with the mortgage repayments. Ifthi, thank you again for joining us. Another great conversation. Thank you.
Thank you, Gemma. Thanks for having me. Yeah.
You're welcome. And we'll be back next week with more money and mortgages chat. Have a great day. Stay safe, and we'll see you again soon.